Today, I'm going to share with you what I like to call the super simple investment strategy. It's a strategy that's the simplest you'll find on planet Earth. And if you follow it, all the steps from A to Z, you will become rich. Hey, Frank Thomas here from Wealth Generation Strategies. Welcome to today's video. If you're a new viewer, welcome. Thank you for joining me today. My name is Frank Thomas, and today I'm going to be sharing with you what I like to call the SSIS, or the Super Simple Investment Strategy. It is a strategy that is really easy to implement, but a lot of people don't. And you got to follow the steps. I've got exactly 6 strategies you need to follow one after another. And I got a super special bonus at the very end, so you got to catch that as well. And I promise you, you follow this strategy, you will become rich. So let's get started right away. The first part of the strategy, number 1, is start paying yourself first. I know you hear it all over the internet, but it's really, really true. If there's any one strategy in this whole video, this is the one, and this is why I started out with, you've got to get into. This is a habit, and you can't break this habit. If you want to be rich one day, you want to make sure that you're paying yourself first. Get into this habit and don't spend any of it for any reason. So what's going to happen is after you've paid yourself first, you're going to put this into some sort of investment, and you treat it like money you've actually spent. It's gone. In other words, it's there for you for the future you, not for present you, but future you. You want to do this because I promise you, this is life transforming. So start paying yourself first. Let's get to point number 2. And that's making your savings harder to access. This goes with number 1. Initially, you may not have enough money to open an investment account with a company like Questrade or Wealthsimple or Moomoo or whomever. So what you want to do is you want to open up a savings account in a bank that you normally don't use. In my case, we have a bank up here. It's an online bank called EQ Bank. Great little bank to be with. They offer a slightly better interest rate than everybody else on a savings or TFSA account. What I did initially was I moved all my money over to that account just to make it a little hard. I promise you, if you leave the money sitting in your checkings account, it will get spent. Get it out. Just get it out. You don't want it there. If it's not there, it can't be spent. And if you put it into this secondary account that's a little harder to access, you're more apt to save the money that you've saved for you. And you want to get it away from the eyes of everybody in your family, because it's so easy to spend it thinking, oh, we have extra money, and it's gone. I played that game. It doesn't work. So make your money harder to access. Point number 2, and continue to save until you can open an investment account, because that's really important. This is going to make it even a little harder to access that money. It's still accessible. It's still your money, but you're making it a little harder. It takes a little more time. This is, if I like to call it, it's like, you ever hear the method of taking your credit cards and put them in water and freeze them in the freezer? So if you want to use that credit card, you actually got to thaw the ice out. Gives you time to rethink that purchase before you make it. Same sort of idea. This is just making it a little harder to access that money, and it just doesn't get spent because you have a moment of weakness. Okay, let's get to the next point. Point number 3. Now that is create that investment account. I mentioned it in point number 2, but you want to get this investment account open. I love this because in my opinion, it is the most hands-off approach when it comes to long-term saving. What you can do is once you've saved enough, transfer the money to this account. If you have tax-efficient vehicles in your country, consider using them first. For example, in Canada, we have RRSPs and TFSAs, and I'm using both. I will take monies out of pre-taxed income and put it into my RRSP. It's like a 401k in the States. I will have the TFSA, and that's post-tax money. But the nice thing about any gains, they're not taxable. They're not considered income when you take it back out later. Very efficient vehicle, especially when you hit retirement. So just a little hint if you're Canadian. But you want to create this investment account, and you want to get used to whatever you decide to use. I went with Questrade. It's a very big platform. Is it the best? Probably not, but it works for me. It seems to have a good reputation. I've been very satisfied with it. I've been using it for 3 or 4 years now. Personally, I'd recommend it. It's a really good platform to use. It can be a little tough to get used to, but you want to get in there and just start playing with the platform. Get to know it. Make it another tool in your toolbox when it comes to investing. So create that investment account today. Before we get to point number 4, if you're enjoying this video, give it a like. And if you're really enjoying this video, be sure to subscribe. That way you know when I drop the next video. And I'm trying to drop more videos right now because I got a little bit of extra time. So I got a lot more stuff to tell you guys. So be sure to subscribe and I'll make sure I send you the best content to help you get rich today. But let's get to point number 4. Purchase dividend stocks from the companies you know and trust. And this is going to be in your investment account. Again, this is just one strategy of many, but I found it to be a very easy strategy because it's very hands-off. And also, too, you're purchasing stocks from companies you know and trust. And that's the real ticket here. Let me give you, for example, do you enjoy Coca-Cola? Well, then you should consider purchasing Coke stock. Do you enjoy Pepsi? There's Pepsi-Cola. Do you use toothpaste like Colgate or Crest? A lot of them are made by a company called P&G, Procter & Gamble. Now, are you going to get ecstatically crazy good returns on these stocks from the dividends and that? Not necessarily, but I can also say to you, these are very stable because these are companies that are continuously churning out and supplying customers on a monthly basis, thus generating profit and can give you dividends and raise the price of their actual value of their stocks. What was the first one I bought? Coke. Believe it or not, Coca-Cola. Do I drink Coke? Well, I don't drink Coke itself very much, but I drink a lot of their products, their bubbly products and that. So again, it's a company I know and trust. They've been around for a long time and they're very worthwhile. And also too, I did forget to mention, focus on what are called dividend aristocrats and dividend kings. A dividend aristocrat has been a company of a stock that has continuously raised their dividends for at least 25 years. They've never missed a dividend payment and they've never reduced their dividend payment. A dividend king is the same, but for 50 years. Coke, for as an example, is a dividend king. Just something to think about. Now, you're not going to get your highest returns from these types of stocks, but it's an excellent place to start, and I highly recommend it. Hands-free, easy to do. Get started. Number 5, continue to pay yourself first into your investment account. And this is really, very important. Yes, I did talk about paying yourself first right in the beginning, but you want to continue to pay yourself first and find ways to increase how much you can pay yourself first all the time. Continue collecting those good dividend stocks, and when you're more comfortable, there's things called exchange traded funds or ETFs, and these will give you a higher rate of return. And learn how to do this on autopilot. An awesome way to do things. You can set things up in the Quest Trade that when you actually get a dividend, it'll automatically rebuy, if you have enough, it automatically rebuy more stocks. And there's no fee to that. That's brilliant. So you want to do this on autopilot. And also, don't worry about market swings. The stock market is an insane lunatic. One day, he's trying to overcharge you for a stock, and the next day, he's trying to undercharge you. So don't worry about the price swings. Remember, you're not in this for a week or a day or a month. You're in this for years, and you want to have that sort of attitude. Go look at the stock market. Over the course of years, a good indicator is the S&P 500, strong and poor 500. It's the top 500 stocks in the United States. Or you can look at the NASDAQ 100 and go look at it. And you'll see on the long term, it does go up in price. So just remember that. But continue, like I said in this point, to pay yourself first into your investment account on an every paycheck basis. Number 6 is all about scaling up your efforts. Be sure that your investment broker account has drip turned on, and I was telling you about that earlier, and that is where you automatically rebuy new stocks as you get dividends, and because you want to have those dividends reinvesting automatically. That way you can get your profits earning more profits, and this is really a magic. This is where the magic really happens. I went from earning maybe $10 or $20 or $30 a month in dividend revenue But with that continual drip program and continuing to invest, now after 3 years, I'm making about $2,200 a month. And it's exciting. And it's actually outpacing me and my efforts. I'm putting less into it now than the actual dividends are reoccurring on a monthly basis. And they're automatically dripping, and they're automatically dripping into new stocks. And that's what you want. And it's all done for free. And also make sure, another thing too, is if you ever have a windfall, let's say you get some extra cash, a check comes in, or somebody who's owed you money gives it to you, put it into your account right away. You'll thank me for it one day in the future. If, for instance, every year we get a tax return, about $7,000 to $8,000. So what do? I do take $1,000 out for us to have a little bit of fun, but the rest goes right into long-term savings, and I've already been able to save over $30,000 in 3 to 4 years doing just that by itself. Because again, what happens is you put that money in, and it's like I'm making really good returns on the account now because I've learned a lot about how to invest, and it's turning into a sizable amount, and I'll leave it at that. But I've been promising a bonus all this time. Now, here's the bonus. Do watch your balance increase over time. This is really important because what happens is as you watch your balance increase, as you watch your dividends increase, it motivates you to save more. It motivates you to do more to get that account higher. You're going to take more windfalls and deposit them too. Just doing windfalls can easily boost your efforts in initial years by 10% or more, which is just nuts. And as you become more educated on what you can safely invest into, you'll increase your returns by investing into higher paying dividend products. Right now, my average rate of return is about 16%. In the beginning, it was only 1 to 4%. So that gives you an idea. So get these strategies happening for you today. As you noticed, I didn't get into any nitty-gritty specific stocks or anything like that. Now, if stocks aren't your game, look into real estate. I love stocks because you can get started with a small amount, and everything that you take into account has very small risk to it in terms of how big it is. With a piece of property, you could be investing a lot of money right off the kick. Your first property could cost you $500,000. So that's just something to think about. I've always stuck to the stocks and things like that because I just find they do just really, really well. But what I wanted to ask you was, now that you start to save and you're saving and you're starting to see things happen and you're becoming a mover and shaker and you're slowly becoming rich, are you wondering, how do you find financial security in all this? All the things you're doing right now are showing you this. But I've actually created a video recently called The Ultimate Guide to Financial Security. And I recommend, if you're interested, go take a peek at that video. It's a great little video. I've just released it, and I think it's something that you really enjoy if you enjoyed this video. Frank Thomas here. Thanks for joining me, and we'll see you in the next video. Talk to you then. Bye-bye.